Hi, everyone. How's everyone doing on this Tuesday with the Fed coming in the next 2 days? Arena, how are you? Hugo, Kevin, Brock, my stalwarts, Didier, that's always here. All good here? Okay. So, yesterday was pretty wild. Shalom Aleichem, Amira. When this happened yesterday, right here, that was, 60 handles. Hello, Tomas. Nice to meet you. In basically two candles, 60 handles and two candles. I didn't think it would be able to fight its way back up, but you know what it made me think of? That old expression. Well, all my expressions are old, right? Okay. Anyway, markets bottom in silence and top with violence. This was certainly a violent move. Yeah, it's everywhere. It's everywhere. But, now let's look at where we're at now. And we haven't quite made a new high yet. We're about 5 handles away. And the difference between, the little mini sell off we had last week and should we make a new high here into the Fed and this week is that we confirmed last week and still got a break. And this time on the 2 hour, I don't believe we'll confirm unless you have a huge candle to the upside. Um, you'll have some glaring divergence on the 2 hour and on the 4, and the NASDAQ also will have it on the 4 if it makes a new high, even the 2. And this high in NASDAQ, this was diverging here. Yeah. Yeah, it's like 2000 is here again. Anyway, get used to things like that for a while. So anyway, I'm stalking S&Ps. I want to see what happens at new highs. If we do that today, I may take a partial position and then wait till after the Fed to add. It could go all the way to 3,900. I mean, if you want to measure it, although we haven't broken out, from 38.60 to 38 would take you up to 39.20. I'm thinking more like, if we make a new high, 38.80-ish, just a guess. Um, I am taking a shot here in Euro Pound, thinking that we're not going to make a new low here. So long around in here and risking about 10 pips under the low. We'll see. If we clear, the more conservative thing would be to wait for closes back over this horizontal resistance here. Oh, wow. That's something else, Sensei. So back over this level is going to measure up to about 90. So we'll see what happens here. I'm thinking this was a low, and now I'm looking for a higher low to be put in here. We're getting a pullback in Canada. I think maybe around 2660. I didn't do the fibs on it yet, but I still think this was the bottom, and that we're going to have maybe more of a pullback here. And I want to be long. Crude is still, I think, about $1 away from making new highs, 80 cents away. We'll see what happens there. Good morning, Monica. Okay. That's an interesting point. Interesting point. And still thinking the dollar is not going to just succumb to a new low here yet. And this could still be corrective. So we'll see if we could, generate something before we make new lows. Euro is still the weak sister. It needs to close back over 22 to neutralize this. I still think there's one more shoe to drop in that as well. And gold and silver just look like, neutral calls. Could we get one more push up towards 1880? Or are we just going to roll over from here? To me, that's a coin toss. So it's an I don't know. And if it's an I don't know, not that I ever really know, but at least I might have an idea of what a probability would be. And this to me is completely a coin toss. My bias is new lows are coming. So, but I'm not just going to short it in a neutral area here and hope that this is the right entry. Up here, I'd consider it. Okay. Silver's a little stronger than gold today. Let's see if maybe we could get something like this going here. Let me remove you guys. Hello, Humphrey. Yeah, maybe some type of, some type of action here. Something like this, maybe into the Fed, 2620-ish about. So we'll look at that. Hi, Jeff. And US dollar yen. This is a pretty important area on yields now, guys. We almost got back to the breakout. Okay. I don't know if we're going to one, but this might be an area that we could look for maybe one more push up in yields. And if that's going to happen, we're probably going to get another lift in yen. I know it's really been dead since the rally here. Maybe we could get one more dip to 320, but I can't say it's bearish because this was pretty directional, and we've already taken up 2 or 3 times as much time just moving sideways to consolidate and create the oversold condition by not giving back much. Pound looks okay. I mean, a pound almost looks like it wants to make a new high. So we'll see. I had this little head and shoulders formation that it broke down of last night. I just took about 25 here yesterday. I wasn't there for this, but so much for this formation, right? At 650, breaks down and then heads back up. Almost looks like we could have a new high here. But again, the weakness is euro, and even the commodity currencies aren't acting great. I can't get real bearish Aussie yet because look at this. I mean, compared to having some weakness and a decline here, you're really not getting that same type of trading action in the Aussie, and the Kiwi is even acting better. So maybe we have a new high in the commodity currencies. And we have Peter Bokvar with us today. I haven't talked to Peter for a while, so stick around for that interview. Be interesting to hear what Peter says. He thought the market could rally into the vaccinations, and that was before we even had approval of any vaccinations, and both did happen. So now that we have them, I'm going to be interested in seeing what his take is here. He was talking about inflation and bull moves in commodities, bear moves in the dollar, well before both of them really got going. So always eye-opening and edifying to hear Peter Boockvar. So
Yeah, if you guys don't know, and good morning, Dale. If you guys don't
yeah,
know who Peter Boockvar is, he's probably, well, he's one of those guys. If you watch CNBC any amount of time for the last 10, 15 years, you've seen him, and you know, you've seen him and you go, oh yeah, I've recognized that guy, you know, that if you don't know who he is. He's really, really a great analyst and really worth listening to. And that's one of the beauties of listening around, or excuse me, sitting around waiting for the face webinar or a face interview that Dale does, is being able to really dig in deep and hear from some of these people that you see on TV, and get a longer you know, view from them, and not just a, you know, 2-minute soundbite.
Yeah, you know, one of Peter's sayings that I love is the Fed. Everyone would say, well, the Fed's data dependent. And Peter came up with a saying that the Fed is S&P dependent rather than data dependent. So yeah, he's a very,
It's
he's one of those
that's
thinkers.
probably pretty accurate, right?
Yeah, yeah. How you doing today, Blake?
You know, I'm awake. I'm all right. I mean, it's just, you know, it's like same
Quiet,
old.
bored. Yeah.
Yeah, I mean, you get up and you're like, oh, look, you know, futures are up. You know, it's the same crap. And you know, it's interesting. You said, you know, maybe the market's looking at or buy the market into the S&P is what Peter Book into the vaccine. Sorry, that's what Peter
Yeah.
Bookbar said. So a lot of good news on, you know, the vaccination front. A lot of people are expecting, you know, big news out of Johnson and Johnson, and you know, it's one of those situations that, you know, we're here. You know, the vaccines are basically here. You know, we're seeing some better therapeutics. We're seeing vaccines, and it's going to be interesting to see how the market responds, because you know, we have been in a by the rumor. Now you have to wonder if around here is sell the fact type of situation. Obviously, the markets continue to stay very well elevated, and that action. What do you make of what you saw with GameStop and all these other stocks yesterday?
Yeah, Bubblicious and
When's
even
the
that
last
big
time you've seen action like that?
uh
Dot
2000.
com. Yeah.
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 Morning.
Yeah,
Yeah.
good morning. I mean, you don't you see this type of, I mean, I'm old enough to be around, you know. I mean, that's how I made my initial
Fortune.
fortune was, you know, I was long GoToNet and along a lot of it. So, you know, and there's a stock that, you know, made no money, and, you know,
Yeah.
happened to be long a big piece of it. So, but you know, I haven't seen this type of action since then. And but I know, but there's a reason, right, Stelios, right, Coach? There's a reason why those stocks are being they're being bought, and, you know, they're the most aggressively.
Massive short squeeze.
Yeah, they're being very much targeted. I mean, you look at GameStop. And I was saying yesterday during the daily roundup webinar for our Forex Analytics subscribers, I can't remember the last time in the last 5 years I've been at a GameStop when there's been more than two people, the person working and myself, in the store at the same time. And maybe another customer. But I've been going there for years because my kids are teenagers, you know, and they play video games. But, you know, big box retailers like GameStop, Dillard's was another one that, you know, was rallying. I guess Bed Bath and Beyond. I'd have to go back and look.
I thought they were out of business.
Maybe they're out of business. You know, who knows? I mean, I don't know. I don't follow those equities, but I know that a lot of that, when you see stuff like that moving, you have to be really, really careful. You know, and I don't know if today's the top. I don't know if next month is the top. I don't know, but I have to say that
Blake,
you have to be careful. Yes.
if I may say, I think that the first thing that people should be careful under such conditions is being short. And I'm not kidding about it. You mentioned, for example, 99 2000. If people
yeah, but
start,
I would say we're more in the 2001. 2000 2001. This is the Steve, because I lived it, and I know Dale did too, and Stelios did too. This is like the very tail end of it. But yeah, I mean, we could continue higher for sure.
yeah, I think people can find out that you can get squeezed a lot more than you initially think. Before, do I agree that we're closer to a like top than a low? Yeah, obviously. But do I believe that that necessarily means that this is where we stop? No. I
Yeah,
mean,
that's and that's the point I'm trying to make is, the top could be here, it could be 2 months from now, it could
yeah.
be, who knows.
Hmm.
But this is the type of activity that you tend to see during, periods where you
Yes,
have to just keep your radar up. You have to be very careful at
absolutely.
these levels. And we're seeing we're seeing like a lot of the manic type of you only live once type of trading and investing. So
It's
um
different this time.
it's always different. It's different every
Yeah.
time, you know. Yeah, so anyway, I just a couple points I wanted to bring up before we start on our analysis. It's interesting also is that you're seeing some of these commodity currencies are making like a like and this is one of the things that I wanted to point out regarding like the commodity currencies. They're still diverging away from the S&P as the S&P or the Nasdaq continues towards highs or near highs. Like here's the S&P right at the highs. The Aussie and the Kiwi, yeah, I mean they're up today, but they're definitely not at the highs. That doesn't mean that they can't catch up, but they are struggling to keep up with the moves that you're seeing in some of these indices, and you gotta pay attention to that. I mean, you see the dollar Canadian. I mean, we're well off the 126 level. Yeah, we're pulling back right now. That's just because you're seeing some natural pressure, upside pressure, and risk appetite. But this dollar Canadian, in my opinion, is setting up for a move back up towards 130. It's does it do it today? You know, uh, it'd be fun if it did, but I don't know if it's going to do that today. But you're seeing that type of divergence between these commodity currencies, the emerging market currencies. You look at the dollar Mexican peso. I mean, this is a huge squeeze yesterday. I mean, we ripped from 1970 to 2030. I mean, this is a let's see percentage move. I mean, basically like 2.5% move yesterday, higher in the dollar Mexican peso. You got the US dollar, South African rand, same thing. A lot of these emerging market currencies and commodity currencies are already starting to show you that, that they want to turn, and that's why you have to keep an eye on them, because if we do get some sort of, if like you're dealing with the S&P here, remember we have the FOMC tomorrow, and I don't know if people are going to be so high, so wanting to buy the S&P up at range highs ahead of tomorrow, and not knowing what the Fed's going to say. So, we're up at resistance. I noticed how yesterday we hit the 50% retracement in the S&P and held it as support and bounced back up. You know, that's the level that I think we talked about it yesterday. I think we actually wrote that down on our bias chart, but let me go ahead and make sure. 38.25. We have written down the 38% retracement, but this is the 50% retracement, and that's what we have to pay. Well, I would say 3,800 now is what we have to pay attention to today. So let's go ahead and write that down. Hey, Dale, before I continue on, do you have anything else that you want to say about the equity markets here before I continue?
Jesse Livermore said it best in 1930s. The pockets change, the suckers change, the stocks change, but Wall Street never changes because human nature never changes.
That's true. That is true. That's true.
So Jesse could say it better than me.
Yeah, well, you're pretty good at repeating what these legendary traders.
Except I'm not looking for the same ending as his. Okay.
All right, well, let's get through these. Let's get through these currency pairs really quick. And remember, just if you're if you don't recall, on the bias chart, we're going to be doing this starting next week. We're going to be doing it at a special time. I'm going to give you more of my rant and my thoughts and what I'm looking at for the day, versus versus, doing the bias chart. We'll be doing the bias chart separately, for the Forex analytics community after the FACE webinar starting next week. So here's the euro, still, mid-range and finding support around the middle of the range ahead of the FOMC. I don't expect us to go very far. Whether we, make it up to 122 or 120 or down to 120.50, I really don't expect us to go that far from where we're currently at ahead of the FOMC. We could, but the 618 comes in at 121.06 today. So let's write that down. And then resistance is probably going to be 121.90 now. Okay. The cable. So we are back near the 137. And you know what I'm really paying attention to now is just the big 78% retracement. Now that's all I really care about regarding the pound. It's the 2018 high to the low here. The 78% retracement comes in at 137.50 basically. That's what really matters. Support would be the wedge support, and actually the spike lows here. So I think you can just basically say that this 136 level is key. What I need to do is write down these. So let's say 136. This would be 3,800. This is going to be important for the bulls to hold. Let's go over to the Aussie. So the Aussie, we're challenging the underside of the broken channel. Now this channel's not perfect, but it's not bad either. So that's why I think we have to be really careful with the Aussie at current prices. Let me make sure that that's correct. I want there we go. So you can see that the Aussie continues to challenge the underside of this trend line, right? I'm going to mark up this resistance right here, which is previous support, current resistance, should be current resistance. That's going to be 77.40 roughly. I mean, we're pretty much there. Support, I mean, this took the stops last night below these lows. So we broke through 76.70 in European trade. And it seems like these types of moves that you saw in Europe last night are the kind that we've been seeing in North America as of late. So it seems to me Europe has had pretty steady moves, and then North America has been a lot of these fake outs. I was surprised to actually get up this morning and see Europe faking everybody out here. But I would say that support is going to be pretty critical at 76.70 now. We're range bound. Kiwi just squeezed to the 618, excuse me. We have a couple highs here, the previous head and shoulder pattern. That comes in at 72.40. So we should write down 72.40 and 72.66. And we're just going to keep it in range. Support, a lot of horizontal support right here on the hourlies. That's going to be basically today's low at 71.67. So 71.65. Okay. Dollar Canadian. So the dollar Canadians come under a little bit of pressure. We are near the 38% retracement, but might slide a little bit further. So 38% retracements right here. The 50% retracement, horizontal support all comes in at 126.85.
Do you think that's a bottom there, Blake? The rally,
that?
was that enough to convince you that we may have had an important low?
What, down here?
Yeah,
Yeah, I do. The reason why I say that is because of, some of the extensions that we're at, the 127% extension of this is the post-COVID spike.
yeah.
We had a 261% extension of this move here. I do think that this around 126 is great support. I'm kind of doubtful that we, get back down there again.
Okay.
But we could.
Yeah, sure,
Steve,
everything
if
could happen.
Steve's correct and, equities,
Keep
continue
melting
higher,
up, yeah.
yeah, and then we'll get down there. So, but I think that those, that 126 level is really critical now for the dollar CAD.
Fade Steve Volge at your own peril, because he'll talk your ear off if you disagree.
Steve, I didn't say it. 127.80.
Right, Steve?
Oh
Oh my God! Now he's
he's
out. He's out of character now, and he's ignoring me. I'm used to it.
Resistance is going to be 128. I'm going to go ahead and just try to get this all done really fast. 128 for the dollar CAD. I doubt we make it up there today, but if we do for some reason break highs, then you just have to realize this horizontal resistance is right here. Dollar Swiss, our head and shoulders trying to play. We had the 50% retracement hold, which is 88.40. And so 89.25. Right. Let's see here. US dollar, Norwegian krona. Oh, look at the spike. The squeeze from yesterday. Hell of a squeeze. I did play this to the long side yesterday, and I got out at 8.54. I bought it at 8.51, sold it at 8.54. I did not think we were going to complete. This was like an intraday flag pattern. I was like, oh yeah, we got a little flag pattern. I'll play it. I'm like, oh, we're not going to make it all the way back up to, we're not going to complete that yet. And then, we blew right past it. So, but what is interesting is where we ended up holding in the US dollar Norwegian krona, once again, at the 864. I think we've written 864 down multiple times over the last couple of weeks. And I think that we have to write that down again. So we went as high as 862, but that is critical in keeping this trend bearish. Support 850. Okay, let's see here. Moving right along, dollar Mexican peso. Nice pullback in the dollar Mex after, making a real big move up. So you can see this support right through here this should be good right through here, because you see the broken trend line, also that spike high. So that's going to come in at 1995. I should offer some pretty decent support today for buyers. Resistance is obviously 2025. Moving right along. Let's see. Dollar yen. 103.30. 104.40. Great. You guys know I'm having zero fun with dollar yen, and I would say 104 should offer resistance today if we get above that 104.40. Okay, still in a range though. So I mean, this should offer resistance up here, but in the event that we can squeeze past this like 104 level, that should get us back up to these highs. I just you can have fun trading that. It's not something that even remotely close to my radar right now. So 90, 618 held, which is 90.60. we write that down yesterday? We just did 91.90 dollar index, 91.40, then 91. So yesterday, did I write 91.40? Why would I write that? Because we were here yesterday. Or maybe we were down here, spiked up to 38%. Okay, well, the 90.60 is resistance. Oops. 90 is support. And then last but not least, gold. Here we go. And, we're trying to form this inverted head and shoulder pattern, but what's going to happen pretty soon is we're going to lose interest of the market, if we don't do something soon. So 1875, and what happens is your pattern just gets nullified because it elongates too much. So 1835, 1875. All right, and then it's set up in a range. So here's your bias chart. And Steve Stelios, I thought there would be something a little bit more exciting happening with this move higher, in equities. But yeah, I don't know. It's like, what are you guys thinking here?
I don't think anything has changed materially.
Exactly the same thoughts.
We had
I don't see anything that has changed.
How about our sale? Are we extending it another day or two on our
Yes.
memberships? Okay, guys,
I
you
think
don't know how
today's the 26th.
I had to beg these guys to do it. Okay. I mean, I'm calling them all night. You have to extend it, so
Yeah, we were supposed to
could-
kill that last night. What happened?
yeah. I begged them to, let it go a few days because I said, I have a tendency to procrastinate. A lot of traders do. So give them another few days. And Steve
well-
finally relented because Jason was beating him up in a wrestling match.
so
So,
Very true.
All right, awesome. Well,
Remember,
guys,
Blake?
you guys remember I will make sure that this offer is not valid after Monday because we're going to be
Ooh, the
doing
bad cop. Yeah.
the daily roundup, or excuse me,
Mean.
the face webinar, and the bias chart analysis is going to be for Forex Analytics subscribers exclusively. We'll still be here every day on Face. Dale will be doing his interviews. I'll be doing myself and Steven Stelios, and Grega will be, and Andre. And when he's here, we'll be providing some of our intraday thoughts.
I thought, Blake, I thought of what FACE stands for now with FACE 2.0. Instead of Forex Analytics Community Experience, it's going to be Forex Analytics Compressed Experience.
It's going to be a little bit. It will be a
What,
little bit.
huh?
It'll be a little bit
Be compressed a little bit?
But just remember, guys, the bias chart, I really, am going to spend some time going through every day answering questions, because I just don't answer any questions any days because I don't have time to in this format. So I'll be there to answer your questions and kind of be more meticulous about the reasons why I'm finding these support and resistance levels where I am. So everybody, thank you for your continued support. And remember, you don't have to be a premium subscriber to listen to the Face webinar. You could be the light version at $19 a month, and you can still get all the webinars. But obviously, for the price, it's worth taking the premium. So this way you can get in the chat rooms and be completely immersed in our community. All right, guys. Hey, I'm going to pass it over to you. Good luck, everybody, today, and just be really careful out there. Like I said, the volatility, it's a little scary with things the way that they're developing now. So just be careful.
Thank you very much, Blake.
The
Thank you.
waiting is the hardest part. Tom Petty.
Yep. Rest in peace.
Yeah. Prolific
Um,
songwriter.
Yeah, he was good. So overnight, not much has happened. Like I said before, all we saw was a little dip in risk assets, and it got bought straight away. big picture hasn't changed. There's nothing really to say. I mean, I've been reading that there's going to be more negotiations in the U.S. Senate about the stimulus package. I mean, oh my God, just get it done and do the next one and the next one, and we keep going. I think what the market's going to be, what I think is going to shock the market eventually is if or when the Fed and other central banks start taking away the punch bowl. I am not saying they will, they might not ever do that, but if they even hint at trying to tighten in any way, I think that's where we're going to see some fireworks. And we had.
Oh, they will, but
we had
they will be forced to do. But when they are forced to do,
reverse.
yeah, when they are forced to do, things are going to be so bad already. I mean,
Did you hear Yellen's statement, guys?
Did we
That
what,
she
sorry?
doesn't think there will be any financial crisis
ever?
in our lifetime.
Of course not. Yeah.
Somebody else said that, wasn't it? Bernanke afterwards, after the.
He said it was
2008.
contained. Oh, he said that after that? We'll never have another one?
I'll have to search that, but somebody
Yeah.
said, was it Bernanke? I can't remember.
Must
Somebody
be-
has said that before, but anyway.
Must be the secret password to get into the club.
Yeah, absolutely.
Yeah.
Okay.
But yeah, I agree with you, Steve, and it's going to be worse than it is now. But at some point, when they do hint, hold on a second, I have my daughter here. Hold on. Yeah. Sorry about the background noise. When they
Get
do
an
hint
office,
at that,
man.
yeah, I know. Well, I am in my office, and she's coming into my office to watch her videos.
Yeah.
When they do hint about tightening, just like we had the taper tantrum a couple of years ago or 3, I think we're going to see some movement for sure. But the question is, will this happen? When will it happen? Etc. But what else was I wanted to say? Okay, we also have. I was reading about Germany, where Merkel was saying that their management over the pandemic is slipping out of control, and they want tighter measures. And in the Netherlands, I'm sure we all saw the videos overnight of there were protests and stuff because they're imposing curfew. Remember, we're only weeks away from days or weeks away from elections there. So there is a bit of unrest. It's not. I don't think it's a major story. I don't think it's anything to worry over. I mean, this is something that's been going on, the COVID and everything, for a year now.
How about Renzi offering his resignation? Any big deal? Of
Conte, you mean? Yeah, Conte.
Conte,
yeah. But yeah, that's you see the market's not moving, so the market doesn't care, and it's Italian.
I think the market has just gotten used to having constant political unrest in Italy. It's not news anymore, you know what I mean? And as I was explaining the other day, and I had said in the past, when Italy was in the forefront once again, it's the electoral law such garbage, actually, that it's practically impossible to form a strong government without coalition. And coalition governments have the problem that they get almost nothing done because they have different opinions on important issues, which means that they cannot actually produce reforms. You need a strong government to go through the painful process of reforming, because reforms almost always include hurting some segments of the population and some groups, and coalition governments simply can't do that. And that's why this situation gets perpetuated. And unless they change the election law, I don't see how they're going to stop going through this stupid process of, in essence, changing government on average every 1.5 years.
Yeah, and you know how it works with coalition governments. The minority part of the coalition always kind of holds the power.
Yes,
and,
they blackmail the majority.
Yeah, and we've seen this here in Greece. I'm sure it happens everywhere. But anyway, I think you're absolutely right, Steve. Also, we had some data. I know data doesn't matter, but we had some data. In the UK, average earnings index up 3.6% year on year. That's a big jump, especially compared to inflation. We had a conversation in the chat room about this, and there were people saying, look, the low-paying jobs are being lost, and the high-paying jobs are not, at least to a greater extent. That's why earnings is rising.
That is true, Stelio.
That is true. Yes, but still,
we
it's
saw
something...
the same thing happen after the first breakout of COVID in the US as well. We got a huge jump in average hourly earnings because the first jobs that are being lost under COVID are the service sector jobs like bartenders, waiters, so on and so forth. And these are the people that, in essence, push the average lower.
Yes, absolutely. So that was something that happened, and actually the market didn't care, and the pound actually slid lower after those numbers. So it shows you how much.
Speaking of the pound is at the highs of the day, by the way. Now, it remains very, very resilient. On one hand, it remains incapable of breaking through this key confluence of resistances at 137.50. On the other hand, it remains very resilient, and it just it just doesn't want to roll over. So it's a little bit strange. I think it has to make a move soon, one way or the other.
Yeah,
there's a lot of pent up energy, I think, here.
Yeah. On the other hand, we've had a trade data and PMIs and stuff. They've been awful. I mean, really awful in the UK. We had the trade survey today, which came in at negative 50. Expected quite a bit higher, but basically we're seeing the effects slowly of Brexit and sorry.
Your father came over, Million Michael.
Yeah, and the dogs are barking.
Yeah.
So we're seeing the effects of Brexit slowly coming through. These are January numbers now, and I think the UK is on course to have a pretty rough year or two. But as I've said before, I think in the long run...
Who isn't, Stelio?
yeah, good point. Who let the dogs out?
Under circumstances, who isn't? Yeah.
Poor Scal, that's funny. But I don't have much else to say. It's been really, really quiet today. We're all waiting for the Fed tomorrow, and that's pretty much it.
Somebody mentioned EG, by the way, in the comments. EG seems to be coiling also here, Stelio. On one hand, we have this key support area roughly at 88.50. On the other hand, I'm monitoring this descending trend line resistance. I think we should see a rather decent move here, one way or the other. I mean, whichever way we decide to break through, I think we should see a continuation. To be honest, the fact that it hasn't managed to rebound much is probably more of a bear signal here in Euro Pound than anything. But until we actually see a legitimate breakout, there is no reason for somebody to jump the gun. The range has tightened quite a lot, so I think one way or another we're going to know soon.
Yep.
Anything else, mate?
No, that's it from me.
Sansil says Italy is going to sue Pfizer over non-delivery of vaccines. Okay, interesting.
Scott Henderson is saying, what do you think about the bank in the U.S. banks being required to store Bitcoins at the banks? That's news to me.
I didn't know that was an actual thing.
Being required to do what?
Store Bitcoins.
Who said that?
If somebody has Bitcoins, they can store them at their bank, or what? Instead of having, I don't know. I need to read up on that.
Not sure what you mean, Scott. The bill passed the House. Okay, and they're
okay. More information. So you mean that a bank will not be able to refuse? They will have to, in essence, accept storing Bitcoin for people. That's what you mean. What do? You deliver like your thumb drive, and they're supposed to to store it in a
vault,
safety box or whatever. What exactly?
Oh, it could be used for collateral.
Collateral. How the hell can you use as collateral an asset that can be 25% lower in 1 minute? Yeah, this
Anyway.
all sounds ridiculous to me. It's not that
Yeah.
I don't believe you.
Yeah.
We're living in the era of ridiculous in any case, in the vast majority of things. So,
Yeah.
you know, if that's the case, which I have no reason to doubt you, I'll just add that to the list of things that make no sense whatsoever. I mean, what kind of collateral is Bitcoin? I mean, for me, Bitcoin can be in a week from now at 50,000, as likely as possible it is to be at 5,000. So what kind of collateral is that?
Of changeable variant.
Yeah,
st-
I mean,
stable.
just get in the position of the financial institution. Let's flip the coin and say the opposite. Let's say they tell you that you have to accept something as volatile as Bitcoin as collateral, and you pass that on to your risk team, to your risk assessment team. How many times do you think they would ask you to provide collateral in Bitcoin in comparison to what you want to borrow? I mean, just for you to be more on the safe side, right? Stocks can be used as collateral, but are really stock volatility comparable in any way to Bitcoin volatility? I mean, how can we compare the two?
Anyway, they'll give them a haircut or something. Who knows?
Yeah, but it has to be huge.
Yeah.
It
No,
has
it'd
to be
be
huge because
50%.
because there is also a second difference there, right? And this is one of the things that like cryptocurrency fundamental advocates don't understand. At the end of the day, even if a stock goes through a bad period, right? Unless the company defaults, which is a rare occurrence. I'm not saying it cannot happen, but statistically speaking, it's a very rare occurrence. You still have ownership in a company that has, theoretically speaking, some profitability, some income, right? You can end up collecting dividends, etc. In the case of actual commodities like gold, you have a commodity that has marketable value because it can be used for things, right? So gold, for example, can never go to zero because even if people for some reason stop using it as a financial asset, it will never stop being a commodity at the same time. But Bitcoin can actually go to zero because if people don't want to speculate on Bitcoin anymore, what else can you do with Bitcoin? Nothing. Take your thumb drive and shove it up where the sun doesn't shine. Anyhow, so let's.
So you're pretty neutral about the whole thing.
I'm saying that
I'm
cryptocurrencies.
kidding. I'm kidding.
I'm saying the most obvious thing. Cryptocurrencies are the riskiest of investments. End of story. I mean, literally speaking, anybody that disagrees with that can't read simple mathematical metrics like volatility, right?
Yeah.
Can you think of any other asset that it's normal to drop like 10-20% within 1 minute, Dale? Can you think of any other financial asset that can, frequently like drop 20% and, no big deal?
No. I
Okay.
really can't.
Same thing here.
Yeah.
So let's see. What do we have today? First of all, yesterday was an extremely, extremely, extremely useful example and experience for many people why you do not jump the gun. This is the 4-hour candlestick for which half of my Twitter timeline went bananas thinking that this is the end of everything in stocks.
Yeah.
I remind you,
impulsive, didn't it?
Yeah, I remind you, this is a 4-hour candlestick, and even during these 4 hours, the body of this candle means nothing. If you couldn't see the wick, you would never realize that supposedly something happened here, right? So I'm pretty sure.
In a half an hour, buddy.
Yeah, so I'm pretty sure quite a lot of the people that are just looking for this market to collapse just because it's overvalued, got left holding the bag, what I see left behind is another symmetrical triangle, which is about to break higher.
Could it be a 4?
It can be many things, but who cares
Okay,
about
I'm
it?
just saying it, you know, could it be a 4?
Yeah, you want to talk about Elliott wave analysis?
Not really. I just wanted to know if I could, you know, rationalize trying it if it's a 4.
We can, give a freebie here.
Oh, yeah,
You
this
know, and-
guy's pretty
uh,
good at Elliott.
And Grega thinks that we as a likely scenario, we're in an ascending wedge. So
Yeah,
yes, Grega is expecting as well a
something terminal.
rather decent move lower. As do I, as you know, in the sense I've said many times that this is not a place to belong anymore. But as I've said many times, you need to respect the trend as long as it's lasting, right? And in my opinion, there is also the danger. There is also the danger of a melt up last leg higher. We've seen that before in markets like this, right? So I wouldn't really be surprised if, especially after yesterday's price action, short-term price action, you see like a move going vertical here, everybody being like, okay, that's it, I quit. I'm not ever shorting this stupid market anymore. I'm even like the most passionate bears capitulating, throwing in the towel.
What kind of day did copper have yesterday with that going on?
Nothing. Copper is, I'll show it to you. Copper is still in hypnosis near the highs. I'll show it to you. Here it is.
So just hanging outside of that. Okay.
So somebody can even make the case that, this is also a short-term bullish formation, right?
Yeah.
So we might, even in copper, see, right, one more leg higher. There is that possibility. Let's delete all that. This has already happened. Okay. So yeah, copper still holding on quite nicely here. So that's another example. This is the daily chart, by the way, because I was showing before for our chart, so you don't get confused. And here is crude oil. Crude oil, as we talked about yesterday, also short term seems like it can produce one more leg higher. Why? Because this recent price action looks to me very much like a bull flag. Technically speaking, so far it looks like a perfect bull flag, right? So a break above like 54, I think opens the door for even a move towards 57.5. So the vast majority of the assets are telling us the same story. Look at Aussie, how much it looks like copper in this case. We know, of course, this is a well-established correlation, right? So Aussie as well, which is risk sensitive, let's call it, risk correlated, is also telling us that we might have another leg lower before we actually, another leg higher before we actually reverse lower for like a deeper correction. So, whatever we were looking at hasn't really changed. I mean, I really think we can see another leg higher. And I really think that the market participants are like, most of them are looking for a high. By the way, something noteworthy yesterday, which I was paying close attention to. First of all, yesterday's candlestick is not a bearish one, obviously. We ended up having an outside white candle in the NASDAQ. This is the NASDAQ, by the way. We did find the high of the day, though, exactly at the 161.8% extension of the previous triangle's range. So, I don't know how important that is. For the time being, not really, but just saying. And we're still seeing the persistent divergence both in the VIX and the VXN, right? So, yeah, at some point, these things are going to roll over. But as I said, I've seen these type of markets before, and very frequently before they do that, they want to take everybody for a ride first. if I would want to remember an equivalent example, I would have to give you two of them. One of them is this, the pre-COVID move. If you remember pre-COVID, we were, for those of you that have been for quite some time with us, we were covering this big formation as a likely ascending wedge. Guess what happened? We first had to overthrow this wedge, right? And create an even steeper one before we move lower. And the other example that comes to mind is this one. This was the beginning of 2018 high when we were monitoring this very, very strong, it doesn't look that much anymore, but if I zoom out, we were looking at this very, very strong bull market. So let me zoom in, and we were monitoring at this channel, and we were saying, you know, it's very strong, it's very bullish. At some point it has to find, like, you know, some type of a high and reverse lower, and then see what happened. We broke through this channel. We went literally parabolic for not such a short period. I mean, we broke through this channel, what was it, end of November, and we found a high at the end of January. So we're talking about a 2-month period that literally stocks went vertical, and everybody was like getting more and more euphoric on that move higher before we literally collapsed and completely reversed like 3 months gains in a week. So I think this is the type of price action that we might, it's one of the two possibilities, get here. I wouldn't be surprised to see, a vertical move higher, everybody going extremely euphoric, bears capitulating completely, and then within a very short period of time, reversing and pairing back, the last leg higher, and probably what preceded that, let's say a move back to 3,200, although in that period we might have gone up to like 4,200, you know what I mean? So I wouldn't be surprised to see like a vertical move like this, and then within a period of like a couple of weeks, that. So keep that in mind. That is an actual probability that I think it's decent. I'm not saying that it's impossible to just, end up failing from here and move lower, but I'm saying that this is also a very, very, very probable scenario, especially in markets like this. I've seen it multiple times in the past, and I would definitely not be surprised to see it once again. Anyhow, let me go through some of your questions. I'm assuming some of them will have to do with metals. WTI, we talked about it. It's at resistance. I think that if we break higher from here, we can even see a move towards like 57.5. That would bode well with this scenario that I just talked about, having to do with stocks, right? I mean, if stocks literally just, go parabolic for like one last hurrah higher before a deeper correction, I think that crude oil is going to do exactly that, break through that flag we showed before, and hunt for the next upside target, which is at 57.5. Here it is, right? That those two things are going to happen together. Now, if that is the case, if that indeed is what happens, then you should expect USD CAD to post a new low, perhaps diverging even more this time. You should expect USD NOK to produce another low. You should expect Aussie USD to produce another high over this triangle. You should expect the Kiwi, which, question mark, is the Kiwi leading? Because the Kiwi seems today to be attempting to break through this flag. Right. Of course, it's still early on the day. I mean, this is a very immature candlestick. I mean, it's premature to talk about a daily candlestick when it's still rather the start of the day than the end of the day. But I'm just saying here, might it be leading? We're going to find out. So all of these assets should produce one more high, with stocks producing one more high before we see, for whatever reason, I don't know what kind of excuse, what kind of a trigger, like a sharp reversal lower. And
US lockdown.
that might be, one trigger. That might be one trigger. Sometimes you can't even imagine what the trigger is going to be.
Yeah.
Take, for example, COVID, right?
Yeah.
But we know one thing for sure. When you have valuations being where they are, when you have fundamentals diverging so much from what the markets depict than they do, it's not that you need much of an excuse to see a sharp leg lower, right? Because you have a lot of people being very long, and at the first sign of trouble they see, what is the first thing they do, Dale?
They tune into an interview that I'm doing with Peter Bookvar.
Yes, they liquidate some of their positions, and then they
Tune
ask
in
Peter,
to the interview.
and then they ask Peter, so what do we do now, Peter?
Anyway, it's time. You are
Okay,
very
nice.
passionate today, bro. So appreciate all your looks and your analysis. You're one of the best traders I know. How's that? Okay, Peter. Great to have you here today, Peter. I'll be
Yep,
sharing
same here. Thanks for having me.
Yeah, what a great time to have you. If the Fed is not data dependent, but S&P dependent, and we're making new highs, what are your expectations from them? Since that's your statement, buddy.
I don't expect much tomorrow. I mean, the Fed has proven to, as yes, S&P dependent, but right now all they're focused on is getting through the next couple months and see how the vaccine rollout goes. They'll probably get softball questions, but I do think as the months progress and this vaccine does get further rolled out, that there's going to be pressure on them to start a tapering discussion at some point. Interestingly, this morning, the head of the central bank in the Czech Republic actually talked about the possibility of raising interest rates up to 2 times by the end of the year, which is actually prudent central banking, because the reason why central banks did what they did in 2020 was because of COVID, and you'd have to, the proper thing to do would be, as COVID goes away,
unwind it.
But the Fed is obviously taking a different tack by telling us that they're not raising rates until 2024. But the bond market is not just going to sit there and do nothing. We've already seen a rise in rates with the 10-year above 1%. And getting
it's
as high
pulling
as,
right back to that level, Peter. So do you think this was a turn that's long lasting?
I think rates on the long end are going much higher. I think people will be surprised at where they go. I see in a lot of different areas of the economy, both statistically and anecdotally, higher inflation on the good side. We're seeing spikes in transportation costs. We're seeing major supply chain disruptions. We're seeing now increases in semiconductor prices because they can't make enough to satisfy at least the auto industry. So we have goods inflation on our hands, and once it's joined with services inflation, when people start getting back to their normal lives with COVID, once rents, which is a key component of CPI, start to inflect higher again to join what we're seeing in the home price market, where S&P CoreLogic just now said that in November, home prices rose 9.5% year over year. That's some serious heady inflation. And that is a price gain that is more than offsetting the benefits of lower mortgage rates. And this is as the Fed owns about a third of the mortgage-backed security market. So I would hope that maybe some reporters can ask the Fed, why are you still buying MBS when we're now seeing 9.5% type home price increases? So inflation is here. And I think that's why we've seen this rise in inflation expectations within the TIPS market. We've seen a pretty good rise in commodity prices across the board. Obviously, gold is near a record high. We've seen energy prices get back above 50. We're seeing corn, soybean, wheat prices spike. We're seeing copper prices spike. So
you feel like when you started talking about this, Peter, probably 6 months ago. And now you know what everyone is. And plus we've had, this big bull run in grains, and metals have been a little bit more sideways, and energy has been pretty resilient. Are you starting to think that maybe you have a little bit too much company on this narrative right now?
Yeah, it's definitely gaining some consensus. I agree, but I see that inflation takes time to embed itself, and it'll take some time to flame out. And I think this is just the beginning. But I think people will be surprised at where inflation goes. I think people will be surprised when they start seeing 3% plus year-over-year CPI gains, because that's where I think we're going. And I think that is going to be highly disruptive to the world's bond markets if that happens, and it's going to possibly force the hands of central banks. Central banks believe that they're in complete control. They believe that that the current low inflation statistics measured by PCE, that they have license to do what they want to do, and they can shift policy when they decide. Like they can arrogantly tell us where they want interest rates to be and when. But if the bond market starts to revolt because inflation is rising, then the Fed loses some of that license. And I think that's going to be
do you think the vigilantes are going to make a reappearance, like Phoenix rising from the ashes? You think they're already in the market and they're part of this decline? I'm looking at TLT right here, Peter, and since the Fed came in during COVID, we're mainly moving sideways, but it almost looks like there could be one more run in the bond market to the upside. Could we have just a little air pocket if, say, there is, even though we have vaccines, possibly because of variants and what people are doing in Europe, if we could have another lockdown here in the US, do you think Biden will do it?
No, we're not having another lockdown. In fact, California yesterday said that they're reopening. Chicago last week said that they're reopening indoor dining. Lockdowns are over. Everyone's looking towards reopening. Everyone's looking to I mean, even Andrew Cuomo, who has killed a lot of businesses, along with people, unfortunately, in nursing homes, said a few weeks ago that we need to reopen these businesses, or else we're not going to be businesses to reopen.
Okay. All right. So pretty optimistic tone. How are you deploying capital right now, Peter?
Well, optimistic tone in the sense that I think that we're going to get this vaccine right over the next couple of months, and that the second half of the year is going to see a big normalization on the economy and our living, our lifestyles in terms of.
But it's going to cost us.
Yes, because it's going to cost us in higher inflation, a weaker dollar, higher interest rates, and a reset on very extended market multiples.
Okay. So what kind of reset are you thinking here, Peter, on market multiples? Where are we now, and what could we pull back to?
Well, as the market right now, as of today's opening, I mean, we're going to be trading at about 23 times earnings. So you get a rise in interest rates. Right. Maybe we'll still see $170 of earnings per share, but maybe that multiple is 18 instead of 23. I don't know if that's going to happen, but if you put an 18 multiple on $170, that's an S&P that's closer to 3,000 without any change in earnings. So I think getting the stock market right this year is going to be more getting the PE ratio right. I think it's an easier call to say with the vaccine that earnings are going to get better, the economy is going to get better. But tell me where the PE multiple will be, and I'll tell you where the market will go. I think it's hard to think that the PE multiple is not going to contract if I am right on inflation and long-term interest rates.
Okay. So let me ask you about some of the other phenomena that aren't as, are probably part of the same symptom. Penny stock volume through the roof. Everyone's talking about GameStop, this type of price action. Pretty euphoric out there. Have been euphoric, and that hasn't put a dent in anything. Does that tell you that we're, within 5% of a high? But are you looking for what type of correction to get the PEs back down to those levels? Would it take 10, 20% from wherever the high comes in?
Well, euphoric markets, which, as you say, we are clearly in, defined by the option activity, defined by the investors' intelligence that has had bulls above 60 and bears in the mid-teens, and the city panic euphoria index, where the threshold of euphoria is 0.4, and 2 weeks ago we printed 2, and last week we printed almost 1.9. But euphoric markets and a speculative mania doesn't matter until it does, but it always does. And markets don't correct by going sideways; they correct by going down. It's just a matter of getting that timing right. But we're in a speculative phase that only happens every once in a while in the history of markets, but we're in one of them now. And for those that were in markets in the late 1990s, this is definitely a reminder. Most people trading a lot of these stocks, like GameStop, and Bed Bath and Beyond, and others, weren't around in the late 90s, and so they don't have that muscle memory.
Okay. All right. So maybe the Fed might mark this short-term high. I mean, if we know what's happening with this kind of mania, don't you think the Fed has any trepidation about malinvestments? I mean, especially, mainly highly speculative option buying and penny stock buying. What do you think they're thinking about that? That's fine because it's adding liquidity to households? Or
Yeah, they don't seem to be worried about it. I mean, even Powell in his last meeting was asked, "Are you worried about market multiples?" And he said that they're essentially substantiated by the low rates. So we have a bond bubble, and he's saying that we don't have a stock bubble because we have the bond bubble. It's I hope that they see it, but they're afraid of markets. They've for decades have been afraid of markets. The markets are their master. And when you hear about, oh, we don't want to repeat the taper tantrum, well, that's because they're afraid of the markets. And as long as they're afraid of the markets, they're going to be afraid to disrupt that. But now they're reaching a point where they've created another epic bubble again. And I don't know how they're going to extrapolate themselves. I mentioned earlier this 9.5% increase in home prices. I mean, this is not healthy behavior.
Yeah, with the housing stock at, I believe, historic lows. So,
Well, the existing home sale number, yes, inventories are very low. The inventories always fall in November, December because of the holidays. But yeah,
okay.
Inventories are still very low.
So you know how we could increase supply, Peter? How about if there was some hedge funds that are not positioned well, and they bought up a lot of supply in 2008, 2000 through 2010, turned it into a yielding investment. Maybe they have to put some supply back out on the market if there was a run on their assets or some negative performance. But didn't they buy up, like maybe 10, 20% of all the foreclosed properties out there?
Yeah, they were definitely an influence. I mean, that's the chase for yield.
Yeah.
Now priced out the first-time home buyer because they're getting bid out by private equity and bid out by people that aren't first-time buyers that have equity in their homes and money for down payment. But that first-time home buyer is the one getting screwed by this.
Right. And also, I've heard, Peter, can you verify it, that a lot of people are having, even with all this appreciation, and then some people with their work have run into trouble where they're not making as much, but the banks are very reluctant to give equity loans, even though there's huge appreciation, that homeowners used to be able to tap into that ATM machine much easier than now. Is that true?
Banks have tightened lending standards across the board. And it's not just in mortgage, it's in real estate, it's in commercial and industrial loans, that all this easy money has not seeped into an easing of lending standards. It's been the exact opposite.
So isn't that deflationary?
Yeah, on paper it is.
Okay.
But if I can't get a container from Asia because it's being used someplace else, if I'm having to pay double-digit increases to get a truck to ship my goods from point A to point B. It doesn't matter. We have inflation right now on the goods side because of the crimp of the supply side.
Right.
We have oil above 50 because we've had a crimp on the supply side. You don't hear about oil SPACs or copper SPACs or nickel SPACs or corn SPACs. So we've had a big impact on the supply side that is leading to the inflation that we're seeing. But when you do get this vaccine and people start behaving again as they did pre-COVID, then you mix these supply constraints that are not getting resolved anytime soon with a pickup in demand, and that's going to be a perfect cocktail for higher inflation.
Okay, so we could, like the 70s, we could have higher inflation and not great performance in other financial assets like equities.
That's correct.
And bonds are really going to be the weakest, the place you don't want to be because of a falling dollar and higher prices. You're going to have to pay people more money for them to hold your paper. Is that what you're saying?
I believe so.
Okay.
And to the dollar comment, the dollar also being weighed down by the exploding U.S. debts and deficits, that if that weakness does continue in the dollar, will then further this inflation theme.
Any comment, Peter, on Yellen being Secretary of the Treasurer? And I believe she said we won't see a financial crisis in our lifetimes.
Yeah, she said that a few years ago when she was at the Fed. I think I think Yellen at the Treasury, in terms of policy, is really irrelevant. She's not she can't pass legislation, and she's not at the Fed. So she's just basically a salesman, just as every Treasury Secretary is just a salesman for their president on the economic and fiscal side. Nothing more.
Okay. I think she made comments about not wanting to use a weak dollar for trade competitiveness. Like, well, she has a choice anyway.
She has to say that because we just a few months ago accused others of manipulating their currency. We can't have the next head of the Treasury admitting that they're manipulating their currency.
Okay. Peter, anything you want, anything else that's on your radar that you want to share with us today? I mean, I think I've asked you about everything. Your view on whether or not you think Biden could be successful in getting his 1.9 trillion COVID relief package through Congress?
He will not be successful getting 1.9 through. He will get something through, probably a trillion and a half. But regardless, it's still another extraordinary amount of money after the 900 billion that was just signed into law on December 27th. So there's this belief that that there's no consequences to all this spending, but we're already seeing it in a weaker dollar. And a weaker dollar reduces one's purchasing power. Also, a lot of the spending is not productive. It's not like at the end of the day, after all this spending, we're going to have a brand new airport or a brand new bridge or something new. A lot of this is just transferred payments and filling holes. So we're spending trillions of dollars of unproductive of spending that is going to leave us nothing at the end of the day.
That word, when's that come home to roost?
Well, it's already beginning to in the weaker dollar. It's already beginning to in the rise in inflation expectations and the rise in long-term interest rates. Even though long-term interest rates are low, obviously, all you need is a small increase in interest rates on a very high base of debt, and those numbers really matter.
Yeah, I mean, the 10-year was 0.5 bips and got to about 118, and now it's hovering. You think this 1% psychological level in the 10-year is important?
I mean, purely psychological. I mean, I get asked the question all the time: is at what level of the 10-year yield does it matter for markets? And I don't necessarily know the answer. I don't know if it's 1.25, 1.5, 1.75. I just know that if the trajectory continues higher, at some point something will break.
Okay, and here is that longer term picture, Peter. If you look at the weekly, looks like here's the tenure. 1.5 going to matter, 2% going to matter, 3%. I guess it also depends on how quickly it happens, right?
Right. I mean, the move above 1 was pretty rapid.
Yeah.
Obviously, we're
This
resting there.
candle. Yeah.
Yeah. But I think in the next couple months, when the vaccine gets further rolled out, that long-term rise in rates is going to continue.
Any reservations for yourself personally in taking the vaccine?
No, none whatsoever.
You're in a hurry. You're in a hurry to do it. Okay.
I look forward to getting it.
Okay. Great to hear that, Peter. And thank you so much for coming in here today. You know, everyone, you could follow Peter on his website at the book report. Here it is. Not the kind you used to write in grade school, but
Thank
some
you, Dale.
great content.
Thanks.
Peter, appreciate you being here. Good
Yeah,
hunting,
thanks
my
for
tree.
having me. Take
All
care.
right.
See you soon.
Okay.
All right. Bye-bye.
Peter Bookvar, everyone. Find him on Twitter at pbookvar. And that's going to be a wrap. Turnaround Tuesday, everyone. I hope everyone has a great day. And remember, don't just count your pips, count your blessings. And we'll see you tomorrow. Adios. You're very welcome, everyone.